In the following episode, Justin and I answer more listener questions. As you will hear, a recurring theme is that in order to make the most of your royalties, you need to know what you own, where they are located, and when nearby oil and gas activity is expected to occur. Which brings me to the sponsor of this episode. I'd like to tell you about a free app that I've been using from Enverus Energy Link called Mineral IQ. Mineral IQ enables you to view monthly income, track earnings trends, and download pay stubs. It also provides in-depth valuation information you can use to make confident decisions when to sell or what to buy. It even tracks surrounding rig and permit activity and provides you with that data on a weekly basis. One Mineral IQ user said, "I had just inherited some income on a well, and Mineral IQ's appraisal feature gave me the confidence to hold on to my interest instead of selling it at the wrong price." If you aren't already signed up, be sure to visit www.mineraliq.com today to get started. Again, that's mineraliq.com to get started for free today.
Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm here to help you make the most of your mineral rights and royalties. And I'm joined by Justin Williams, who's my co-host as well. Justin, how are you doing today?
Doing pretty good, Matt. Can't complain.
Can't complain besides your microphone dying on you, right?
Kill my microphone at some point or another, but that's all right. The iMac is pulling okay for the microphone, so.
Yeah, you sound good. So if Justin sounds different, that's the reason why. So we'll make sure to get a new microphone lined up here for the next episode. But one of the things that I realized, Justin, as we were preparing for this week's show is that we haven't really covered listener questions in a few months. And I was going back through my notes and realized that actually we had a few questions from 2022 still. So some of these are a little bit old and I've replied to most of the people already. But if you hadn't gotten a reply from us, my apologies. And hopefully we'll read your question today and give you an answer. And if not, I'm still going through the list and we'll respond via email or in a future episode here soon. So we definitely have quite a few other questions lined up for you on a future episode. So if you've sent in an email, don't worry. We are still going to give you an answer here as soon as we can. So Justin, pretty interesting list of questions this month.
It was, yeah. We get a lot of the typical questions, but these are some pretty interesting ones and kind of touch on some different points that I don't know if we've had questions about before.
Yeah, it's going to be interesting to dive in. I'm looking forward to it. And so with that, do you want to go ahead and cover the first one?
Let's do it. So our first one here is from Mike. He says, I have recently inherited some income from mineral rights. Ownership of the rights remains in a trust, and I'm interested in learning about a management company, what role they play, what's the responsibilities to trust beneficiaries, what services should the beneficiaries expect from the management company and the trustee. And Matt, this is a interesting question. Not as many people ask about mineral managers as I would expect.
Yeah, and I wonder if people maybe just don't even know that service is out there. So this maybe is a good time to talk about what is a mineral manager, basically. So in essence, you're outsourcing the management of your minerals and royalties to a third party, just like it sounds. And they're, I guess, from an education standpoint, these folks oftentimes will have varying backgrounds, whether it's in finance, accounting, legal side of things, or land or engineering. And so it just depends on the person. Some of them have worked in the industry and then go work in this capacity for like a bank trust department or something like that. There are also smaller mineral management companies. So this can range from the large bank that specializes in this type of service to a landman or somebody that covers this. And some of the services that I provide as well sort of overlap into the mineral manager side of things. I have a client, in fact, that just received some division orders and she's wanting to double check that they look good. And so that's the type of service that a mineral manager will provide. But there is, really can run the gamut. And I know, Justin, you've dealt with this somewhat in dealing with a bank trust department. What has your experience been with that?
The bank trust department, I think they have a really interesting perspective, and these guys are usually pretty knowledgeable. And Matt, the for a mineral manager, I think it really comes down to the size of your interest, how good you are at keeping up with everything, and there's a lot of value in the experience that the right person has.
That's a good point. And I think this can run the spectrum of full service. You hand over the keys and you just get a check periodically, all the way to you do it yourself and you're sort of the mineral manager, to anywhere in between. So if you have the desire to take a more active role, you can do some of this on your own and then outsource some of the things that you need help with, whether that's through sort of a turnkey like a mineral manager or a bank trust department, or actually just hiring individual consultants. So when you think about management company roles and responsibilities, back to your question, Mike, I would say sort of key expectations that I would have when hiring a mineral manager. First of all, they should help you go through and understand what you own. And if there's any gaps in your records, they'll help you fill in those gaps so that they also have a complete picture and can help manage those interests. That might include finding wells that you should be getting paid on and getting those in pay status, and then managing those in some form or fashion in the future. Now, a side note here before we dive into some of the specifics is I would say the level of service or the level of detail that you have the mineral manager get into your managing your interests would depend on the size of the company probably, and how many resources they have, how many other clients they have, and sort of what their mission is. Is this something where they're going to basically be a bespoke, handhold, really get in and proactively manage it? And some mineral managers will do that, to more just when they get a response from an operator, when they get some new division orders, they'll review those and process them on your behalf and charge you for that. They'll take the checks and put them into like an escrow account, and then we'll distribute the revenue to the beneficiaries on a periodic basis. They can periodically perform royalty audits and revenue accounting functions. So they might have, as part of that agreement, that they'll do that on a periodic basis, just go in and do a check to make sure that the volumes that were reported to the state match up with your royalty check and that you're paid correctly. They will look at, if you're approached to negotiate a lease, they'll help negotiate the lease on your behalf, but maybe they won't go out and proactively seek a new lease. So it just depends on, you need to tell your mineral manager what you expect from them, and make sure that they'll be able to do that. But I would say those types of functions where you're looking at managing the royalty income and distributing it to beneficiaries. They will also do additional services, like I mentioned, whether it's negotiating a lease, signing division orders, helping you sell an interest. All of those things comes with an additional cost. And then they can also help line up an appraisal, or do all those kinds of things as well, whether they do it internally or hire a third party. And ultimately, the thought is that they're filling the role that the mineral owner would typically do if they were to take an active role in managing their interests. So if you don't have someone in your family that is willing to step up or has the time to step up and manage the interest, then it can be a good idea to outsource this to a third party. Just know that you're going to pay for that. Most mineral managers will charge a base fee per asset. So if you have a lot of assets that are very geographically dispersed, that can add up in cost as well. They may have an hourly rate that they'll charge for some of those additional services that they mentioned. And then just for the function of managing your revenue, they'll charge you around 5 to 6% of the gross revenue each year, just basically to deposit those checks, do some sort of basic auditing or accounting, and then distributing the revenue. And all those fees are typically negotiable. So it's always a good idea to go and get multiple bids if you're looking at outsourcing the management of your minerals, to try to get somebody lined up that matches what you're looking for, and then also at a cost that you can afford and that makes sense. So lots of options there. We actually talk about this in a lot more detail in episode 123, which was how to hire a mineral manager. And then we had a friend of mine, Jimmy Wright, who's a landman and mineral manager, on in episode 180. And he talked about some of these concepts as well. So listen to those two episodes if you haven't already, Mike, and that'll hopefully help you understand what to expect.
Absolutely. And take your time, Mike. Take your time picking somebody. You want to trust this person and build a relationship with them. So take your time and talk to several people. All right, Matt. Our next question here is from Tom. What are the chances of them drilling for oil in the Powder River Basin in southeastern Montana?
That's a good question, Tom. So I took a quick look at this and tried to see what kind of activity was going on in that area. And there are a couple of wells that have been drilled in 2022, as well as whether they're permitted or have been drilled in 2023. Looks like most of the wells being drilled are vertical wells and conventional production in the Bell Creek field in Powder River County in southeast Montana. And most of that activity, at least in the last year or two, seems to be centered around Township 8 South, Range 54 East. So if you have minerals in that area, that's something to keep an eye on and see if those wells might be something you have an interest in. Otherwise, if you look further east, kind of the eastern part of Montana and the southeast in Carter County, there's not a whole lot going on there. In Montana, most of the activity is located in the Williston Basin, which is on the other side of the state in the northeast corner and around Richland County in particular, where they're targeting the Bakken formation primarily. And so that is where, if you have minerals in Montana, sort of northeast Montana is where most of the activity is going on, where they're drilling these long lateral horizontal wells, drilling for oil up there primarily. And so not a whole lot going on in the Powder River Basin in southeastern Montana. I think the Powder River, we were expecting it to be sort of one of the next big unconventional plays, but it seems like the geology is not as uniform as some of these other um, basins. And so operators are focusing more on kind of the Wyoming side of the Powder River Basin, kind of the southern part of the Powder River Basin in particular, where they're drilling horizontal wells. And so that activity, I think, was expected to be maybe a little bit higher than where it would have actually panned out to be, begin just because of the geology, and it's a little less economic than they were hoping and less uniform. There's still some great wells that are being drilled down there, but again, not a whole lot going on in southeastern Montana, unfortunately, Tom. But time will tell. Could change. So definitely, it'd be one of those things where it might be a wait and see type of a situation.
And our next question here, Matt, is from Dave. He says, I just sold a rental property and looking to invest proceeds into mineral rights through a 1031 exchange.
Well, thanks, Dave, for your question. This is a great time to talk about this opportunity. Many people don't realize that mineral rights are a form of real property and actually is something that you can either invest in through a 1031 exchange, or if you sell mineral rights, you can use a 1031 exchange to invest into a rental property, for example, like a rental house or a condo or something like that. So it's kind of a cool opportunity that we have with minerals and royalties to help defer capital gains. Now, you don't avoid paying capital gains, but you can defer them to a later date by using that Section 1031 of the IRS code, which is a like kind exchange. And again, it covers very specific types of properties. So definitely get with your CPA if this is something you're thinking of, because you'll need to make sure that you're, first of all, investing in the right type of property, and then also that some very strict timelines are covered. Otherwise, you'll have to pay capital gains tax for the sale. So some of the specific timing requirements, again, this is just from doing our research on the internet. This is informational purposes only, shouldn't be construed as legal or tax advice. But basically, the IRS has a requirement that the property to be identified and the exchange has to be completed not more than 180 days after the transfer of that exchange property. So, in other words, after the sale of the property that you're looking to get out of. And what you want to make sure, and you have certain timing where you have to identify the property. So, you don't have to have completed the closing or having the purchase completed, but you have to have identified the property, I believe, within 45 days after you sell the property that you're relinquishing. And if you don't, then again, you're going to be opening yourself up to capital gains taxes and you won't be able to defer it. But another thing to keep in mind is, because of those very detailed steps, there's a service that some companies offer, and they're called qualified intermediaries, or also called exchange accommodators. There's the website 1031.org. You can learn more about this, and I think it has a directory of those qualified intermediaries. And basically, they shepherd you through that transaction. So, per 1031.org, per that website, it says when a taxpayer engages in the services of a QI, which is a qualified intermediary, pursuant to an exchange agreement, the IRS does not consider the taxpayer to receive the funds. So, that's, I think, one of the key points there is you don't want to touch those funds. Again, those would go to that QI and they'll hold them until you need to buy the replacement property. And then the QI would deliver the funds to the seller. So basically, they sort of take care of the money part of things to make sure you're protected from a tax standpoint. So a lot that goes into a 1031 exchange, but it can be a really good option if you are eligible and you'd like to be able to defer capital gains taxes.
You said it, Matt, and it's very common in commercial real estate or real estate in general, and it's employed every day. So definitely something to look into and a great tool. Our next one, Matt, is from Don. Don says, thank you for what you do for mineral owners like myself. I'm facing a capital gains tax issue for 2022 and could really use your counsel. Here's our issue. Along with myself and two siblings, we were blessed with a mineral inheritance in 2013. In 2016, 3 wells were drilled and we've been receiving royalty payments. We sold our minerals in 22 and now are facing a capital gains tax. We need help in determining the base value of our minerals in 2013. There are no producing wells until 2016. Can you offer suggestions as to how we arrive at a base value for our minerals? Matt, we don't ever hear this question.
Yeah, that's right. This is a very common situation. And actually, Don is one of my clients. And so I took his original email here because I think there's a lot of value in explaining the options when it comes to selling inherited minerals. Because one of the options you have is to get a professional appraisal to establish a step up in cost basis, which is just a fancy way of saying what the property was worth when you inherited it. And especially if you inherited property, I would say in the last 10 years, and you're receiving royalties or had received royalties from horizontal wells, the chances are that property had some pretty significant value when you inherited it. And if you sold it for a significant value, it'd be nice to be able to not have to pay the full amount of the proceeds of the sale in terms of capital gains tax. So by establishing a step up in cost basis, just as a hypothetical example here, let's say somebody sold a property for $100,000. If they don't do anything, they have to assume a $0 cost basis, and then they pay their capital gains tax rate based on the $100,000. So that could be, $15,000 if you're taxed at a 15% tax rate for capital gains. So pretty significant tax bill eats into the value that you had within that asset. Now, for that same owner that inherited that property that they eventually sold for $100,000, maybe that property was worth $75,000. And so when you think about, if you think about your tax liability, if that property was worth $75,000 when you inherited it, that's your cost basis. If you sold it for $100,000, then your capital gains tax is based on $25,000 instead of the $100,000. So, you're paying 15% of $25,000, which was $3,750 instead of paying $15,000. So in that scenario that I mentioned, you have almost $12,000 in tax savings. If you're in this boat, you would look and see, okay, is it worth the expense of hiring a consultant to get an appraisal? Because it is expensive potentially to get a professional appraisal. Can cost ballpark, depends on the scenario, depends on the property, but around $5,000. And so what the appraiser can do is give you an estimate before you hire them or before you spend any money and say, okay, is it going to be worth you going through the effort of getting an appraisal? In other words, is it going to save you more in taxes than you're going to spend on the appraisal? And that's a very easy calculation to do. And any appraiser should be able to provide that for you so you don't needlessly spend money and don't end up saving, in taxes. So that is something that we do in my company. It is sort of a specialized situation where you're looking at doing a retrospective valuation. In other words, a look back in time at when you inherited this property, estimating what the property would have been worth at that point, documenting all of that in a very thorough report, which is usually 40, 50 pages long, and then coming up with that value. So then you can use that as the basis for determining your capital gains tax liability. And that report is something you'd want to hold on should you ever get audited so that you could have the necessary documentation that you use to document the value. So it's not something you can just simply pull out of air. I guess you're taking on potentially a lot of risk. And again, this is another area where you need to get with your CPA and get their advice specifically because each person's situation is different. And they can give you some different ideas as to how to make the most of that situation. But that is basically how you would arrive at a base value for the minerals. It's called doing a retrospective valuation or establishing a step up in cost basis so that you can understand what the property was worth when you inherited it and then use that as the basis instead of having to just say it was worth nothing and then paying taxes on the full amount of the sale. So
Absolutely, Matt. And, unfortunately, this really doesn't always come up when the sale of the property actually happens. It ends up coming up in the next tax season, and it can be really alarming for people. And so they're kind of in a mad scramble to figure something out. But there is a solution, at least.
yeah, no, that's a great point. It's something you do want to plan ahead a little bit. So whatever tax year it is that you sold the property, of course, you need to have all of this figured out by April. Ideally, you'd want to get that done before you file your taxes in that next tax deadline. And so you're going to need to hire somebody and give them enough time to do the work because it does take some time and that's why it costs what it costs. And so, yeah, that's something to keep in mind. You got to sort of think ahead a little bit. It is something where if you're selling the property in December and then you call them on March 31st, they're going to probably tell you, yeah, I'm sorry, I can't help you because I'm just too busy with other client work and won't be able to get you something in time. But something to keep in mind as well. We have an episode. It was episode number 32. You can listen to. We talk about this with Rob Prentice as well, who's a guest on the show.
All right. So our next one here, Matt, I thought was really interesting. I'm interested to see what you have to say. So it's from Ivette. She says, I'm a petroleum engineer and worked in oil and gas for over 17 years. I worked in different roles within those years, such as production operation engineer, A&D engineer, and a reservoir engineer. I also have experience in different basins across the country. Since it's been hard to find a job in the industry, I've decided to explore the option of buying mineral rights. I'd like to start my own company as a mineral rights royalty interest owner. She goes on to say, honestly, it's a little bit intimidating to absorb all the risk involved in becoming a mineral rights owner. However, I would like to put my experience into practice in the industry and start with some kind of small deal first.
Thanks, Yvette. That's a great question. And honestly, you have a huge leg up given your background because you already know how to value oil and gas properties. That's what a reservoir engineer does for everyone listening that may be not familiar with that title. They basically look at how much oil and gas is in the ground and what is that worth to the company, both from a reserves standpoint, which is basically the book value of those oil and gas assets that they own, as well as, from a mineral standpoint, it's actually easier for you because I know you're used to valuing companies a bit and looking at the operating side of things and what the expenses are and from a working interest standpoint. And that gets a lot more involved in running economics. With minerals, it's a little simpler because you don't have the cost element. You have, severance taxes and maybe some ad valorem taxes, but so you already have that part covered. And I like what you said here about putting into practice your experience in the industry with a small deal first. And that's, I think, starting small is a great way to do it. People may think that, well, in order to invest in mineral rights and royalties, I need to be investing millions of dollars. And that's not true. It just depends on the size of the interest. In other words, how many net acres and where it is relative to current drilling or future drilling. And that'll determine how much the property's worth. And so you can start to dabble in this. I think if you have an area that you are familiar with, I would start there. Start with what you know. Start with the operators that you know about, that you know a little bit about how they go and drill wells, the timing from when they go and spud a well to when the well starts producing, and leverage that knowledge that you have in the industry based on, what basin you're an expert in and the operators, and go and target an area that there's a couple operators that you like and, the geology is good. I would just dive into a very specific area where a little bit about the underlying oil and gas potential there, and start small. You could start to go to the county clerk and recorder's website to look at who has leased their minerals recently, where there are deeds that have been recorded, and use that to identify the mineral owners. You can also go to your state oil and gas commission website and see where there are pooling orders having been filed and look at the list of interested parties and start to do some due diligence and find out how much they own. It may require that you start to do some title work. And so that is one side. If you've been on the engineering side, like myself, your whole career, when I got into investing in minerals and royalties and consulting, I had to learn about the title and the land side of things. And so that is an area where you can find some resources. Potentially with the AAPL is a great resource for land education and contacts, and maybe partner up with a landman. If you know some landmen that you worked with that are good, maybe this is something where you guys could partner together, and they could do the land side of things, which is really important to understand, that you're getting what you think you're getting when you buy something. So you have to be able to run title or hire somebody to run title to know how many net acres they own, and that'll determine how much you're going to pay for the asset. So just a little bit of background as far as, how I would go about it. And I think, again, you have a huge leg up having worked in the industry. You don't have to risk too much capital. You can form an LLC for not very much money, set up a separate bank account, get the legal side of things going, talk with your attorney to see what they recommend as far as any sort of agreements and deeds, and getting help with putting that stuff together and forming the business. But then, once you get that going, you don't have to spend a ton of money to get started investing in minerals. In fact, it's a great way to go about. It's not risking very much in case you make a mistake and maybe you buy something in the wrong area, or you buy something but it ends up not being as many net acres as you thought because there's a title issue, or there's lots of things to get into that. Give me a call if you ever need help with anything. I do coach other investors, and so if you want help with just making sure that you're doing the right stuff, happy to help with that. But yeah, good luck. Again, it's a fun business to be in, and it's something where I would say, as you go into it, think about from a mineral owner perspective. If your approach to sell your minerals, you'd want to treat others as you'd want to be treated. And so think about that from a mineral buyer perspective, because I know you listening to this show, I'm sure you're doing things the right way and you're have the right mindset. There are other folks that are out there that are unscrupulous, and you can differentiate yourself by being trustworthy and have a good reputation from treating people fairly. And that'll also help you get a little bit of a competitive advantage and as you get started. So good luck, and let me know if I can help.
You said it, Matt. And again, good luck, like Matt said. All right, our next one here from Larry says, I read an article you wrote on minerals and enjoyed and learned a lot. The article was written in early 2022. I'm an investor, primarily in alternative spread over about 8 asset classes, which means I'm always playing the other man's game. I do have an allocation to a couple of small mineral funds that I got in around 2019. Then they've performed well. My question is, how do you feel about new mineral funds? I assume mineral and royalty prices have gone up, which makes me concerned that they might not have the IRR, MOIC that I experienced the last 3 years. I would appreciate your feedback, and thanks for informing people that have no real knowledge about the industry.
Yeah, this is a great question, Larry. And he wrote this email at the end of 2022. So that was right when the price of oil was still quite a bit higher than it is now, maybe close to $90 a barrel or so. And so Larry, having gotten in 2019, price of oil was in the mid 50s, I would say, most of 2019. And so, yeah, certainly it's almost doubled, I guess, over that 3-year period. So to your point, that's, you kind of timed it right, which is, obviously we don't want to try to time the market. That's usually a fool's proposition, but in your case, it happened to time well. And, certainly the IRR and MOIC were probably far exceeding what the mineral fund advertised as their target, which is a great place to be in as an investor. That said, I think, there's still folks that are out there investing, and I have some friends that have mineral funds that are out there doing it, and something that I'm looking at as well. And so to your point, I definitely think it is still something where you can make a good return on investment, especially when you think about what else is going on in the market. Things are so crazy. The market has been up in the past week. We're recording this in July 2023, but there are certainly a lot of signs and the writing on the wall that we are sort of teetering on the edge of a potential recession. And so there's a lot of risk, investing in the stock market, obviously, with the underlying economy potentially weakening, interest rates still going up. So that is putting a lot of pressure on trying to make a decent return on traditional investments, like, buying mutual funds or stocks or ETFs. And if you look at alternatives, like what you're talking about, buying producing minerals and investing into a fund, I think the thing that I would look for, and this shouldn't be construed as investment advice, this is just my personal thoughts on this in terms of how I think about it, It's, think of investing in a fund that lines up with your objectives. Talk to your financial advisor, find out what type of an investment you should be making, and make sure that whatever mineral fund you're investing in lines up with that. In other words, does it have near-term revenue and return that it's going to provide? What's their target, for exiting and for giving you that return? Many mineral funds will have what's called an 8 and 20 setup, where that's a preferred return of 8% for all the limited partners, which you would become by investing in that fund. And then the general partner who's managing the fund takes a small management fee, usually a couple percentage points per year. And then on top of that, they may get a carried interest of 20% or more if the fund meets all of the target returns, and that you get your 8% back first, and then they start to get 20% and you get the 80% after they've taken the 20. And it's kind of a great setup because they're incentivized for that fund to perform so that they can get a larger percentage of it. And so in doing so, they'll typically look at investing in minerals that are not producing, but that are, likely to have wells drilled in the next year or two. They'll have some producing minerals that are receiving royalties today. They may have some non-operated working interest in there so that they can get the tax advantage of that, especially if new wells are drilled and they participate in those wells, that you get to expense the intangible drilling costs. You would need to get with your CPA and figure out how that might fit into your tax situation, but there could be some tax advantages as well. Then most guys and gals that have been doing this for several years have sort of a tried and true underwriting formula that they use. In other words, they're not overpaying for these assets. They're being conservative in the underwriting in terms of what future commodity prices are going to do and then when new wells are going to come online. And if they're doing that, that'll be evidenced by good returns over previous funds that they've put together and exited. And so if they're following sort of a conservative underwriting strategy, then that can also help make sure that those IRR targets are met. And so that's something to keep in mind. And when you interview those fund managers, is finding out, how they approach it, how do they look at these new assets that they're buying within the fund, and what is their target time frame for making the return to the investors. And so again, I think it's something where you could still do well. Again, not specific investment advice. Don't encourage anyone or discourage, just saying for informational purposes only. This is sort of how I think about mineral funds at this point. But yeah, I think investing in minerals and royalties in the long term, it's still an area where we're going to need oil and gas for decades to come. It's an important commodity that we produce, and we can take advantage of that by owning the underlying minerals and royalties.
You said it, Matt. And for our listeners that may not be savvy with investment abbreviations, Larry mentioned here that it may not have the IRR, MOIC. IRR is an internal rate of return, and then MOIC is multiple of invested cash.
Yeah, thanks for throwing those in. Good catch there. So that wraps up this listener Q&A episode. Again, we have lots of other questions queued up. If you've sent in an email, don't worry. We're still going through them. We'll get you an answer either by email or on the air. Please, again, if you have any questions you'd like answered, need help with, send it to feedback@mineralrightspodcast.com, and we'll do what we can to get you an answer. Thanks again for listening, and thanks, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.